Smart investors properly manage risk. So that's part of being a good investor, any kind of investor, right? Real estate investor, but also if you're investing in stocks or bonds or cryptocurrency, whatever it is. Smart investors properly manage risk. What does that mean? What does it mean to properly manage risk? There's 4 things you got to do. You have to assess risk. You have to understand risk. You have to mitigate risk, and sometimes you have to transfer risk. So those are the 4 things that you have to do as an investor when you're managing risk. That's important. When I say investor, it's important to remember, I mean, that might mean not just the person that's directly making the investment, but whoever's funding the investment. So if it's a land development project, it could be the bank that's making the construction loan, or it could be the real estate investment trust that is putting up the funds to purchase a shopping center, or it could be you if you're borrowing your cousin money to start a business. So it's important that not just the actual person making the investment understand and manage risk, but that the person that's backing that investment with the actual the money or the capital, that they do that. What that means is if you're in the real estate business, if you are funding real estate transactions or land development projects as a bank or a hedge fund or a real estate investment trust, you should have somebody on your team that understands risk in real estate transactions and in development. So the most neglected risk in commercial real estate by far is boundary and land title risk. Why do I say that? Why do I say that that is the most neglected risk? Now, there's other types of risk, right? So you have the risk that the property's not worth what you paid for it when you go to sell. So there's inflation risk, and there's risk that the real estate market will change. There's risk that the building you buy is going to be, that it will fall down or is infested with termites. So there's that kind of risk. So there's different kinds of risk in real estate. One of the risks that is the most underappreciated or neglected is boundary and land title risk. So why is that? Why is that type of risk so often forgotten when people are evaluating real estate investments? So I'm going to give you 4 reasons why that type of risk is commonly neglected, boundary and land title risk in commercial real estate. One is because that risk is hard to observe, right? So if your building is infested with termites, or it's about to fall down, or it's 80 years old, most real estate people can get some indication that there might be a problem by physical inspection of the property, right? Or even from building photos, even if they're not physically present. That doesn't mean you shouldn't hire a building inspector. You should, but some of those problems, those other types of problems in real estate are more obvious, right? Boundary and land title problems tend to be hard to observe. They tend to be invisible. They tend to be expensive to fix. So it's not like just throwing a coat of paint on a building, or holding the property, pulling a property off the market and waiting 6 months for the real estate market to turn around so you can sell at a better price. Boundary and land title problems are often difficult to fix, expensive to fix. They also can have a large impact on the value of the real estate parcel. So if you thought you had 60 acres and you only have 55 acres and you planned on splitting your lot into 3 20-acre parcels, you got a big problem, right? You're going to have a significant difference in the value of that potential development project because of a boundary and land title issue. And then finally, the other reason that this type of risk is really important is because it's not covered by insurance, as a general rule. So people assume that their title insurance covers boundary and land title risk, when in fact, land title insurance covers very little of that risk. That doesn't mean you shouldn't have title insurance when you invest in commercial real estate. You should get a good title insurance policy from a good title company. But I tell people, thinking your title company covers your boundary and land title risk adequately is like going out in a blizzard, a winter blizzard in a bikini, right? It doesn't cover what you think, or it's going to leave you exposed. So, given that reality, given the challenges related to boundary and land title risk in real estate transactions, what can you do? What can you do as an investor if you need to manage that? Well, you can use a good boundary survey as a risk management tool, right? And one of my frustrations as a licensed land surveyor and a boundary surveyor is oftentimes the boundary survey is either not gotten at all, or is given very little attention. So oftentimes it's an afterthought. The boundary survey is found on low bid, or the investor lets the land title company hire the boundary surveyor. And that's a really bad idea. It's really horrible. So you want to look at a good boundary survey as a risk management tool. It's no different than a building inspection or a real estate appraisal. It is a tool to help you evaluate risk in a real estate transaction. So you can use a good boundary survey as a risk management tool. In order to do that, though, there's 4 things that have to happen. Okay, so I'm going to tell you what those are. So number 1, your boundary survey needs to show the right things. I have another video that talks about the 4 things a due diligence survey in commercial real estate should show. I'll have Lori, our content marketing specialist, link to that video in the description for this video. Second, your boundary survey needs to be high quality. If you get a garbage survey, it's not going to be a very good risk management tool. Not all surveys are the same quality. Not all boundary surveyors are of the same quality. So make sure you get a good survey. Third, you need to make sure that the boundary survey is obtained at the right time. Don't wait until after escrow closes. That's going to make it a lot harder to work with the seller to solve potential problems. So get the survey before escrow closes, before the transaction is completed. And finally, number 4, remember that I, as the licensed land surveyor, probably do not have enough insurance coverage to make you whole. If you hire a garbage surveyor and he does a bad job and there's a problem and you sue that surveyor, he or she probably only carries $1 million or maybe $2 million of professional liability insurance. That's not enough money oftentimes to fix a major problem. And even if it is, you have to go to court, prove the surveyor was negligent. That can be very hard to do. So you want to hire a good surveyor. Don't count on your surveyor's insurance policy or your land title insurance policy to cover your rear end on a commercial real estate transaction. Make sure you get a good survey. So remember, a good boundary survey is a risk management tool in commercial real estate investment. It's got to show the right stuff. It's got to be a high quality. It has to be purchased at the right time. And you need to have somebody that can help you understand what the survey means. But if you can do all those things, then the boundary survey is a very effective way to manage your risk in commercial real estate investing, whether you're a developer or a bank that makes construction loans or real estate hedge funds that's buying shopping centers. You want to get a good boundary survey, and you want to use that to assess your risk on any particular real estate investment or transaction. So in the future, we will do some more videos about this. We'll talk a little bit more about how you can use a survey to manage risk. And I mentioned Lori. We'll link to that video on the 4 things that your real estate due diligence survey should show. I will also have her link to a video I did that explains what the commercial real estate due diligence gap is. It talks a little bit more about the types of risks in real estate and why boundary and land title risk is often neglected. So thank you for watching.